Hello guys, welcome back to my channel. I'm Orko. I'm looking forward to helping new small capital traders in the market. So here I am with the second video of the course. In the first video we have learned about the formation of a candle and some single candlestick patterns. In this video we are going to talk about double candlestick patterns and triple candlestick patterns. So this is a dark cloud cover pattern. So this is a bearish reversal candlestick pattern. What happens in this pattern is this is created in the end of an uptrend and in the beginning of a downtrend when a red candles open above the close of the previous candle and then gives a closing near the midpoint of the previous candle. In the previous video we have discussed a green candle, it opens at the bottom and closes at the top, and a red candle opens at the top and closes at the bottom. So this green candle has closed here and this red candle has opened here. So we can see a gap up opening. The opposite of this is called a gap down opening. So what happened here is after the gap up opening, the bears are trying to push the market down. So by seeing this pattern, we can identify our momentum in the downside. So our entry will be at the low of this red candle and our stop loss should be above the high of this red candle. So this is a dark cloud cover pattern in the real market. This is a Nifty 50 chart in a daily time frame. So we can see that there is a gap up opening and the red candle has engulfed 50% of this green candle. So our entry should be immediately whenever the low of this red candle is broken. So our entry should be somewhere here and our stop loss should be above the high of this red candle. So this is the stop loss and this is the entry. So we can see a good downside momentum after taking this trade. So this is a profitable trade, but take this trade only in swing trading or if you are doing positional trading. So this is a bullish piercing pattern. This is a double candle bullish reversal pattern. So this forms at the end of a downtrend and at the beginning of an uptrend. Here we can see a gap down opening. So this red candle has closed somewhere here and this green candle has formed here. So we can see a huge gap down opening. After that, the bulls are activated in the market and they are trying to push the market upwards. So we can enter whenever the high of this green candle is broken and our stop loss should be at the low of this green candle. So here we can see a bullish piercing pattern. There is a gap down opening and it has crossed 50% of this red candle. So our entry candle should be this one and our stop loss should be at the low of this candle. We can see a good upside momentum after the formation of a bullish piercing pattern. This is a bearish kicker pattern. So this can be a continuation or a reversal candlestick pattern. So this candle forms whenever there is a huge gap down in the market and the bears continuously try to push the market down. So our entry should be whenever this candle's low is broken and our stop loss should be above the high of this candle. So we can see a bearish kicker pattern right here. Here there is a huge gap down in the market and the market after forming this bearish kicker pattern has continuously gone in a downtrend. So our stop loss should be above the high of this candle and our entry should be as soon as the low of this candle is broken. This is a bullish kicker pattern. This pattern is also a continuation or a reversal pattern, and this is the exact opposite to a bearish kicker pattern where the market opens a gap up and continuously try to push the market upwards. So our entry should be as soon as the high of this green candle is broken and our stop loss should be below the low of this green candle. So this is a bank nifty chart on a daily time frame. So this is a bullish kicker pattern in a bank nifty daily time frame chart. So what happens, there is a gap up opening and we will enter as soon as the high of this candle is broken and our stop loss should be below this low of this candle. So we can see a good upside momentum after the formation of this type of candles. So this is called an evening star. This is a bearish reversal candlestick pattern and it forms at the end of an uptrend and at the starting of a downtrend. So there should be a gap up opening between these two candles, and this type of candlestick patterns gives us profit only in daily time frame. So if you are doing swing trading, please use this type of candlesticks. So after forming the gap up, the market should form a very small candle. After an uptrend, the bulls are exhausted and the bears are trying to capture the market. So there are very small candles forming, and once this type of candlestick pattern is formed, we can go long in the put side. So we will see this in real market. So this is how an evening star looks like. So after an uptrend, when the bulls have exhausted, they are forming small candles. The body of the candles are very small. So we will enter as soon as the low of this candle is broken, and our stop loss should be at the high of this candle. So we can see a good downside momentum after the formation of an evening star candle. So this is a morning star candle. This is a bullish reversal pattern and is the exact opposite of an evening star candlestick. So there should be a gap down opening, and the size of the body of this candle should be very small. Then only we can expect that the bears have exhausted their energy and the bulls have captured the market. We can see that the bears are trying to push the market down, but the bulls are pulling the market up. Whenever there is a dip, there is a buy. So we can expect a good upside momentum after this type of candle. The body of the candle is small and it has opened a gap down. As soon as the high of this green candle is broken, we can take a trade by keeping a stop loss at the low of this green candle. We can see a huge upside momentum after this type of pattern. This is a 3 black crows pattern. So this is a bearish reversal or continuation pattern. So what happens here? After the formation of the first candle, the second candle should enter inside the body of the first candle and should close below the low of the first candle. The third candle should open inside the body of the second candle and should close below the low of the second candle. So we can enter as soon as the low of the first candle is broken, and we can keep our stop loss above the first candle's high. So we can see a 3 black crow pattern right here. So the second candle has formed inside the body of the first candle and it has ended below the low of the first candle. The third candle has opened inside the body of the second candle and it has closed below the low of the second candle. So our entry should be as soon as the low of this first candle is broken, and our stop loss should be at the high of this red candle. So this is a 3 white soldiers pattern. This is the exact opposite to the 3 black crows. It can form a continuation pattern or a reversal pattern. So after forming the first candle, the second candle should form inside the body of the first candle and should close above the high of the first candle. The third candle should open inside the body of the second candle and should close above the high of the second candle. So our entry should be as soon as the high of the first candle is broken, we can enter and go long. Our stop loss should be at the low of this red candle. So now we will see what is a swing low and what is a swing high. So a swing low is formed at the end of a downtrend, and it gives us a very good support whenever the market again comes to this position. The low of the previous candle and the candle next to it should have a higher low, and this is a swing high. So it is formed at the end of an uptrend and it starts the downtrend. So this is called a resistance. So whenever market will approach this level in the future, it will face a resistance. It will either come down or it will break this resistance and go up. So this is a swing low candle. We can see the low of this candle has acted as a support in the future several times, because this level is important for some institution or big players. So whenever market in the future comes down to this position, this level will act as a support and it will either break down or it will help the market to go up. This is a swing high candle. So we can see that it has formed at the end of an uptrend, and this level is respected by several candles here and here. This level has acted as a resistance, and whenever market approached this level, it has faced a very good downfall. So now this is the most powerful candlestick pattern that I have ever seen in intraday. This is called an inside candle. This pattern is the strongest and by far the most powerful pattern that I have used for intraday. So what happens here, the second candle, this candle should trade inside the first candle's high, low, open and close. Whenever the high or the low of this candle will be broken, we can enter and we can take a trade. So we can call this candle as a mother candle and this candle as a child candle. So whenever a child candle is inside the high, low, open and close of the mother candle, then it is called an inside bar candle or an inside candle. And these candles are color independent. This could be a red and this could be a green. So here could be 20 more candles in a row, but we will take trade only if the high or the low of this mother candle is broken, we can buy a call position whenever this high is broken and keep a stop loss at the low of this candle. Or if the low of this candle is broken, we can keep a stop loss at the high of this candle and we can go for a put position. So we can see an inside candle forming right here. So as soon as the high of this candle is broken, we can go long, and as you can see that this is giving us a very good profitable trade. We can keep our stop loss at the low of this candle. It has given us a trade of 4 times ROI. So that's all for today. This was the second video of the course. There are 8 more videos to come. In the next video we will discuss about support, resistance, supply and demand zones, trend lines, and in this course I'll tell about the indicator that I use, that is CPR. I'll tell everything about CPR and how to use it for intraday. So if you think this video was useful, then please like this video. Please comment if you want to learn something else for intraday, and please share this video and subscribe this channel. Thank you guys.